Welcome to the Exit Your Business Your Way podcast with Ross Brannon, guiding business owners to the exit they deserve. Ross is a financial advisor who knows that business owners work too hard on growing and caring for their businesses not to leave it on their terms. Each week he interviews a different experienced business owner, expert, and other professionals ready to teach you effective, satisfying business exit strategies that will let you exit your business your way. Don't wait until it's too late. Start thinking exit now. Here's your host, Ross Brannon.
Hello, and welcome to the Exit Your Business Your Way podcast. I'm your host, Ross Brannon. This week, our guest is Bruce Willey, the founder of American Tax and Business Planning, a tax and business planning consulting firm based in Cedar Rapids, Iowa. Bruce is an attorney, a CPA, and a certified exit planner. So he's going to have a lot to share with us. Bruce, thanks for coming on.
Thanks for having me, Ross. Excited to be here.
Well, first off, I'd like to start off to find out if there's any other designations or titles you're going to add to your resume, because it seems like you have just about all of them.
I'm not planning on it anymore right now. I'm kind of tired of taking tests. So hopefully we're done with that part of it. And, unless people are going to start conferring honorary degrees on me, we're not going to go down that road.
Wise man. So tell everyone what you do. Your introduction's a mouthful, but it's pretty exciting.
Yeah. What we do, Ross, is we work with successful business owners and we help them legally reduce their taxes using tried and true techniques that are available in the Internal Revenue Code.
Well, it's funny you say that because, I've had some CPAs on my other podcast. And what I found with CPAs, unfortunately, is a lot of them tend to be history reporters. And they're not proactive in mitigating taxes for their clients. Now, there's a handful of reasons why, in my opinion, but what you're telling me is if you have a high income, if you're a business owner, there are planning opportunities available.
There's a lot of planning opportunities available, and you're right. Most clients aren't aware of it. They approach the relationship with their accountant as, hey, my CPA, he's my buddy, we golf. We have this great relationship. I know he's looking out for me. And the dirty secret is that that's typically not happening. The accountant is busy taking last year's data, trying to figure out how to report it correctly on the tax returns, and then moving on to the next client. And they don't have time to sit back and assess what's going on and think about, hey, here's an opportunity for this client. I'm going to, let me ping him real quick and see if he's interested in it. And that's kind of where I come in, is because I try to stay in the planning space and, communicate with clients and keep things going. So they're paying the lowest amount of tax legally possible. Well,
that's the goal. I mean, obviously we want to abide by the law, but pay the lowest amount possible. So talk about business owners that you work with and some of the challenges that you see as a CPA, as an attorney, as an exit planner.
Wow. Well, we work with clients in a lot of different industries, manufacturing, retail sales, construction, building trades, financial planners, dentists, doctors, chiropractors. I mean, we run the gamut of it. And, the universal challenge is the amount of tax money that they spend. And every one of them wants to pay, their share, but they have a successful year and all of a sudden they get slammed with a huge tax bill and they're looking for options. And it kind of wakes them up to the possibility that maybe there's a way to plan differently and better. And it allows them to provide a safety net for their family and do different things. And so the biggest challenge, candidly, is the constantly changing universe of tax law. The environment we're in right now, they're continuing to add new rules almost yearly, and navigating that and keeping somebody in compliance with that is probably the biggest challenge.
Well, and on the day we were recording, there was news yesterday of a new bill with new taxes in it, and new tax credits in it. So who knows how that fleshes out? And
I've already had 5 texts from clients wanting to know if I've read it and how it's going to impact them. And I go, guys, wait till it's law. I don't know that they have the votes. Let's just relax a little bit.
And let the record state that I hope they don't have the votes.
Yes.
Agreed. And I like to say that the highest rate of return a client's going to get is $1 taken back from the IRS. And I like to say the second highest rate of return is investing in your business. And I usually follow that up with anyone who tells you otherwise is either lying to you or ignorant.
I agree with that, Ross. And what I would expand on is this. A business can have all sorts of plans. They might have a succession plan. They've got a human resources plan, plans for their employees, plans, all kinds of plans, but they don't have a tax plan. The tax plan, in most of our cases, we're working with flow-through entities. They're paying top marginal rate of 37%. If they're in the Obamacare surtax, they're paying, 41, maybe 42% of their earned income to the government.
Plus state tax.
And so, that's a significant expenditure. And if we can reduce that rate down 10 or 15 points, they get to save some money. And the second highest rate of return, I would agree with you, can be from leaving the resources in the business. But one of the things that I really care about is, hey, I want that business owner not to have everything wrapped up in the business. I want them to have some wealth accumulated outside of it. If we can make that tax advantage, great. If not, then we still need to have a safety net there for the family in case something happens. And so, we talk a lot about, hey, let's diversify this a little bit and get some money out. Your business is successful. You're not taking nearly enough out of the company as you could. And we have those conversations because it's vitally important that they take care of their families and themselves.
Well, you're right. But you wouldn't put up with all the headaches of owning a business if it wasn't to create personal wealth. And one of the challenges is many people don't do a great job of transferring wealth from the business to the personal side. And sometimes they feel like, I'm going to pay taxes on that, not realizing it's a flow-through entity. You've already paid taxes on it, whether it doesn't matter what account it's in. But to go back to tax planning, this is not something that can be done on December 26th. This has to be done planned throughout the year. And how many times do you have people who might be new clients or they approach you to engage them, and they'll call you on December 15th or December 21st or December 26th, and you're like, hey, guys, if I was going to take you on as a client, we start in January for that upcoming year, not at the very end of the year, because 99% of the strategies can't be implemented once December 31st hits.
It's surprising the number of calls that I do get. And I did actually deliver a tax plan one year on December 23rd. And due to some flight issues, I was stuck in an airport on Christmas Eve, and my wife was at home with my family, and I wasn't there. So I don't travel on December 23rd anymore. We kind of have a cutoff of about December 15th, where we have a few strategies that we're able to quickly deploy for a very successful year end. But right now, candidly, is the sweet spot for tax planning. We still have 2 quarters to go. You have a pretty good idea of what the year is looking like business wise, and you have good solid numbers. And so we're able right now to put together really effective tax plans, get them implemented, and get them to working for you so that you can save money yet this year. So this is really prime time for us. We're getting into our busy season.
That's really exciting. It's just so important to actually plan. And it's such a mindset shift for people when they start working with someone like you, because they're used to basically dealing with their accountant from like February and March to maybe April 15th. Whereas when it's done the right way, you might meet 3 or 4 times during the year looking at things, and then maybe a few in the fourth quarter, maybe do some things. It's just a completely different mindset. And it sometimes, in my experience, takes people a little bit of time to get used to it, but it's so much more beneficial and powerful to their bottom line.
It really is. And I can't tell you the number of times that I've worked with a client and they've insisted on having their CPA involved in the process. And I'm fine with that. I always warn them, though. I say, there's typically 2 reactions that we get from the CPA. Either one, they're willing to learn and they're really engaged and they'll jump right in, or they're going to be defensive and they're going to say no to everything. So you just need to be prepared for those 2 outcomes. Either way, I get paid and you need to make the decision about what you want to do. And I'll never forget, I had a client meeting one time where the guy insisted his CPA was there, and the CPA sat there and we went through, 22 strategies for this client. And the CPA said, I've heard of that. I've heard of that. I've heard of that. Just went down the list for almost nearly every strategy. And all of a sudden, the client turns and looks at the CPA and says, well, if you know about it, why am I not doing it? And that just ended it right there. I was like, oh, that was a mic drop situation. And we just, they just walked away. I'm like, but the client was right. I mean, it's, the planning that you get from your existing CPA varies greatly, but most of the time the advice is, hey, I had a really good year. This is December 1st. What do I do? Go buy a truck.
Right. But go buy a piece of equipment.
Do you need a truck?
Exactly. Don't spend $1. Well, yeah, don't spend $1 to save 37 cents. Now, do you do the compliance work? Do you do the tax returns, or are you just a tax planner and people work with their existing CPA?
They can do it either way. We have a full service tax and accounting firm here in the building, and my staff is very in tune with the planning that we do. They know how to prepare the tax returns, and they're working diligently right now to get the September 15th deadline going. So they're hard at work. I get involved in the tax return side on the review and analysis. You don't want me inputting your tax return data into the computer. That's not the most effective use of my time. But
right.
We're happy to provide that service. But if a client has a great relationship with a CPA, there's no problem with them keeping it at all. There's nothing mandatory that you're introduced into a secret cult and you have to use us.
And so you're a CPA and you can basically hang with anyone in regard to tax strategies, but you're also an attorney, which definitely helps out in these scenarios as well. Talk about that a little bit.
Being an attorney and a CPA is, I can appreciate and understand where the CPA is coming from and why they tend to be the way they are, conservative in nature, not really planners, because, the entire accounting degree is how to track historic data.
Right.
They don't teach you how to there's no proactivity to it. And so I understand that. But what the law does is the process of going through law school teaches you how to approach a problem differently. You break it down into subparts and you learn, okay, what works at this subpart, and you just analyze a situation differently. And so having the CPA background and having worked as a CPA, doing tax returns for years, I understand that process. And now you can kind of take that experience and you break it down into different components, and then you find opportunity.
So you work with business owners, and there's lots of talk of basically the baby boomers and all the businesses they own and their transition of wealth from selling their business to retiring and things of that nature. So you're an attorney or a CPA, and you're a certified exit planner. So you're expert in helping clients reduce their tax burden, manage the legal aspects of those things, as well as helping them exit their business in the most efficient way possible. Talk a little bit about that.
It's a great place for me to be in because I get to work with really successful people that understand and appreciate the value I bring to the table, because there's a number associated with it. And the most important part to me about my client relationships is the relationship. So I love nothing better than to have a client that I've done a tax plan for, that I've worked with for 5, 6, 7, 10 years, and then they're ready to sell the business. And then we put a plan in place to help them save taxes at the end. And it can make a significant impact on the family when you do it right, when you've saved a 20% capital gains tax on several $1,000,000, or you've saved a ordinary income recapture on several $1,000,000 and got it into a capital gain category. There's lots of tools, lots of nuances depending on the individual client and what they really hope to accomplish. It's rewarding. It's a puzzle every day, right? You come into work and, okay, puzzle pieces thrown on the table. We're going to piece something together. Let's get to work. And it's fun that way. You learn every day. You meet great people, and that's probably the biggest thing is you have to be humble enough to keep learning.
Yeah.
I don't know everything. I know what works and what has historically worked, but I'm always open to new ideas and new concepts and digging into them. And before I take them to a client, though, I'm going to, dig in and let's see what the dirty laundry is.
Now, what would you say the biggest challenge? Obviously, a lot of these people are paying too much in tax. What would you say, though, for someone who says, hey, I want to exit my business, I want to sell my business, I want to retire, whatever language they're using, and let's suppose they say 5 years from now. Now, you and I both know if they call us and say that, they usually want to retire on Friday or next month or worst case scenario next year. But you and I also know that it takes years to plan properly to maximize your sale value in a business. But what's the biggest challenge or the biggest thing that you see business owners really need to address before they go down the road of selling their business?
The biggest thing is actually having an honest plan. Like you just talked about. I mean, I had a client that said we want to sell in 3 years, and we went on a plan to get the financial statements looking good, make some changes to the balance sheet. We took some cash out of the company so that nobody was misled about what was being gonna be there and available if they bought the company. We did a lot of steps, and then 6 months later we got an offer, we're selling tomorrow. And they kind of halted the planning, interrupted. I think they left $1 million or $2 on the table, but it was their choices, right? And so you can only do the best you can with it. And so what I would say is, the lack of a concrete, honest plan. And I understand life happens and sometimes things change, health can be bad, or somebody's throwing enough money at you that you're just going to go.
Right.
And I get that, but that doesn't happen that often in our world. It just is they get tired and throw their hands up and they just take the first offer that comes along a lot of times. And so I'd say that's one of the complications. And then people, you can present them with options. I'm working on a case right now where a week before closing, the client decides they want to do a deferred sales trust, but they don't want to push the closing out. I'm sorry, that's going to be 2 to 3 weeks of drafting. And, that's a highly complex area. We've got to make sure this is done, and we got to review it and review it and review it to make sure this is done correctly. And so it ended up that the closing got pushed, and then the other side pushed back and wasn't going to accept the arrangement. So it didn't matter anyway. But, they wait till the last minute, and then we don't have time to adjust or adapt to it. And that's probably the biggest hurdle we have is, we're always the last to know, and we're the ones that have to get the work done.
Well, and the thing I guess people don't realize is everybody exits their business. So we have to plan for it. Whether you die at your desk or you sell to somebody, everybody exits their business. And if you die at your desk without a plan, that's not a good situation.
Yeah. It's not. And that's one of the reasons that I tend to focus a lot on building some wealth outside of the business, because if you're able to successfully do that, it takes a lot of pressure off the family for the ultimate disposition of the business. You don't want a widow or your children or anybody having to make a rash decision because they're broke.
That's a phenomenal point, because I always see a majority of a business owner's wealth is in the business. And then there is so much pressure on that sale price, and you don't know where you're going to be at in the market cycle. Obviously, right now, private equity is buying a lot of industries up and pushing kind of multiples and valuations up, but we don't know how long it's going to last. And it could end tomorrow, but it's a really good point by you to get wealth building outside of the business.
Well, and this is, going back to the other problems we have in an exit planning scenario, is that the business owner has an unrealistic expectation of the net money they're going to pull out of the deal. And there's almost always a gap because the sales price doesn't come in where they think it's going to come in. There's restrictions on the transaction that they didn't anticipate, or there's a tax situation that the client isn't willing to do anything to mitigate the taxes because they don't want to restrict their money, or, whatever reason they have. And so we oftentimes have a gap that we have to fill with income products. And if we have accumulated wealth during the business, which we can always explain away in a valuation, it's not that big of a deal to really pull some money out of the company to build wealth in a tax advantage manner. That just helps really, really put everybody at ease and takes so much pressure off. Do we need that extra $500,000, and are we going to the mats for it, in the negotiation process? And I really like it when we have the time to do that, and you get a client that's, hey, yeah, I'm buying into that. I like that. And I tell a personal story about that, right? In 2018, I was traveling for business and I had a stroke, and I laid in the hospital room all by myself for 2 days in ICU. Now, my wife and my mom wanted to come down, but I'm like, guys, by the time you get down here, I'm going to be released and home, right? So just stay here and let's let the doctors do their work for a day. And then if I'm going to be here longer, you can come down. But I laid there and I realized I'm an attorney, CPA, CExP, and I didn't have anything arranged for my family. And that was the moment for me. And that's why I kind of become a little bit, preachy, I suppose, about the clients I work with. And hey, what do you have for your family if something unexpected were to happen to you? Now, fortunately, I'm fine. It was a very mild stroke. I was blessed, great care, great help, and I'm good. But if it wouldn't have taken much to push the pendulum in a different direction.
Right. That's good. Now, so let's kind of go back to taxes for a second here, kind of as we wind down our conversation. What would you say some low-hanging fruit is for someone who's like, golly, I'm paying too much in taxes? What's an absolute no-brainer that they've likely not thought about that could likely benefit them?
I know, and it's strange to me, but there's a lot of business owners that don't fund any sort of retirement plan whatsoever. And that's the absolute low-hanging fruit. It's not ideal, but you should maximize a retirement plan. A lot of times business owners don't want to adopt it because of the cost of the employees, but you can adopt plans that are cost effective and only reward employees that actually put skin in the game. And you should do it for you and build a nest egg that way. That's the easiest low-hanging fruit that a lot of people don't even want to deal with. But you can do a simple IRA program. If you don't want tons of paperwork, simple IRA is the easiest way to do it, but it's got some restrictions on it, and companies are trying to push everybody to do 401ks now, and I understand that. Then I would say, one of the rules that doesn't get used offensively very often is what it's called the Augusta rule. It's the rule where anybody can rent your home from you for up to 14 days a year, and that income isn't taxable income to you. And, so you're using your home for business purposes all the time. You're having colleagues over to your house. You're having a barbecue with your staff and their families. You're doing training sessions or strategic planning sessions. You want to be away from the office and the phones. So you're inviting people over to your home anyway. So why aren't you having the company pay you rent for the use of the home that day and creating a situation where there's tax-free income to you? That's pretty low-hanging fruit, and every CPA in America knows that rule, but nobody's using it.
Wow.
So, it's one of those things where, and people say, "Oh, that's too good to be true." Well, here's the code section. This allows us to do it. It's right here in writing, black and white.
Yeah.
It's there, and it's legal, and we can use it. So why not use it?
Yeah, that's great advice. That's absolutely wonderful. So, Bruce, how can people get in touch with you if they like what you say and they feel like they're probably leaving some money on the table, or they don't have someone like you in their life? How can they get in touch with you?
Well, the easiest way is to email me, and my email address is bwilley, so BWILLEY at American TBP, so TomBravoPaul.com, and then we'll follow up. What we typically like to do is start an engagement by looking at your last year's tax information, having you fill out a 2-page fact finder just that provides us information not on the tax returns. And then we provide a complimentary preliminary analysis of what we think we can save you based upon your circumstances. And then we go from there. We'll schedule a call and talk about what we can do, what an engagement with us looks like, and how we might be able to help you. So
it's bwilley at AmericanTBP.com.
Yes, sir.
So, Bruce, I really appreciate your time today. This has been a fascinating conversation.
Anytime, Ross. I love to talk about what I do. It's a lot of fun for me.
You've been listening to the Exit Your Business Your Way podcast. I'm Ross Brennan, and we'll talk to you next time.
This podcast is for informational purposes only. Guest speakers and their firms are not affiliated with or endorsed by PAS, Guardian, or North Florida Financial, and opinions stated are their own. External sites and materials are provided for your convenience in locating related information and services. Guardian, its subsidiaries, agents, and employees expressly disclaim any responsibility for and do not maintain, control, recommend, or endorse third-party sites, organizations, products, or services, and make no representation as to the completeness, suitability, or quality thereof. Ross is a registered representative of financial advisor advisor, Park Avenue Securities, LLC, PAS, OSJ, 3664 Coolidge Court, Tallahassee, Florida, 32311. 850-562-9075. Security products and advisory services offered through PAS. Member FINRA, SIPC. Financial representative of the Guardian Life Insurance Company of America. Guardian, New York, New York. PAS is a wholly owned subsidiary of Guardian. North Florida Financial is not an affiliate or subsidiary of PAS or Guardian. Arkansas Insurance License Number 1613-9032. California Insurance License Number 0L10073. 2022-143604. Expires 9/24.